Hello, everyone. Welcome back to the Prospero.ai stock market live streams. Welcome in here on this big day in the stock markets. We obviously just had the Fed meeting in which they stayed put for this meeting. So the rates are staying steady. And then we have the big tech earnings at the end of the closing bell today. We have Tesla, Google, and Meta. So huge day in the stock market. I just want to make sure that I'm live because, let's see, am I live? Can you guys hear me? All right, yes, I see it on my phone now. All right, we should be good to go. Let me start rolling into some of the stories that we are going to be talking about today before George joins me. And then we obviously have the big model portfolio update at the end of the stream with the earnings on deck. Thank you, Mario, for answering, telling me I'm all good. So after the market initially reacted a little bearishly to the Fed announcement, it looks like Jerome Powell has calmed the market's fears, and it is up on his words since his press conference began at 2:30. And like I said, the Fed remained steady at their current level. And then we also have the Trump media news story I wanted to bring up, where they're going to be providing financial services within the Truth Social app, which is kind of funny because it's just days after X announced that they are going to be doing financial services on Twitter X. So Trump and Elon are actually true competitors in the business world, although they are partners in the political world. But I thought that was funny that just days after they both announced that they're going to be going into financial services. Then we have an update on this whole AI DeepSeek battle that has brewed just after everything kicked off this past weekend. Obviously, Nvidia's been stock has been going up and down. It's been very volatile. It lost its 200-day moving average today, which, if you're a bull in Nvidia, I think you want to see that regained by the end of the market closing today. Let me look live where it is. I believe the moving average was around 122, and Nvidia right now is at 122. So it's back right on it. So I think if that holds today, that'll be good news for the Nvidia bulls. But we got an update from Alibaba. They released a model themselves that they said is better than DeepSeek, ChatGPT, and Meta's models. And all of these Chinese big tech stocks like Baidu, Baba, Pinduoduo, a lot of them are really, really underpriced, and they've lagged the market for a long time. So is it time for some of the people who are excited in the AI story to rotate into China? Is it underpriced there? I will ask George all of those questions. We'll see what he has to say. Then we'll get into the big tech that we have on deck today. So we have Google, Meta, and Tesla. It's going to be some fireworks after the closing bell today. I think I saw that 4% for Google, 7% for Meta, and 9% for Tesla. It's priced into the options one way or the other after the market. So there's going to be a lot of movement. So stay tuned. We may even be live for the very beginning of that. We'll see. If not, let me know how you're feeling if you're a shareholder in the comments right now. Then we have the largest sovereign wealth fund in the world making its most profits ever last year. I'm going to wait to name which country this wealth fund is. If you guys know, feel free to guess in the comments. I think it will surprise most people. It definitely surprised me. And I didn't tell George which place it was. So we'll see what he guesses when we get to this story on the stream. Then we have two more stories that I'm going to bring up on stream today before we turn it over to the model portfolio. As always, please like the stream if you enjoy our content and our stories and you watch most of them. I see we have 5 likes already, but 70 people watching between Twitter and YouTube, so smash that like button. The next story I want to bring up is if Apple is the inverse Nvidia trade right now, because I was noticing that as Nvidia was plummeting, Apple stock was gaining, which is the reverse of what was happening just the prior days and weeks where Apple stock has been very weak. And I think it has something to do with the fact that Apple took a very different strategy when it came to AI, where they didn't invest as much as a lot of the other big tech stocks. They kind of incorporated tech that was already proven, like ChatGPT, into their products. And we've kind of criticized them for that in the past, but maybe it was a smart decision. Turns out now that they didn't have to spend all that money into the development of this technology. So we'll see if that is truly the case or not. I think there's still a lot to play out in this DeepSeek AI story. I've seen a lot of people who it just seems like no the way this is going to go is not decided, and there's still a lot of people who think one way or the other about it. And the last thing I want to bring up on the stream today is Starbucks. They had earnings which were reacted to positively by the market, but there was one piece of data that may not have been so bullish. Their China sales dropped 5% quarter over quarter. And it's the first time I've ever heard someone call for them to spin off their China business after it's been a drag on their overall business for several quarters now. So I'm wondering if a lot of companies that have China exposure are going to face this idea from their largest investors. I'm thinking a lot of the ones we always mention: Apple, Tesla, Starbucks, Nike, McDonald's. All of them have huge China businesses. So I will ask George that. As always, if you have any questions or concerns, or you want us to talk about any stocks today on the stream that I didn't just mention, feel free to let me know in the comments, and I'll be happy to bring them up. What I'm going to do now is check in on the SPY and QQQ net option sentiment in Prospero. Let's see if it changed after the Jerome Powell update. Okay, so we now have the QQQ at 26 in net option sentiment in Prospero. And it's been much lower than that, so it's starting to regain some strength. It's not at a bullish level yet, but it was in the single digits. I think it even hit 0 for a quick, brief moment. So 26 starting to climb back up. Maybe we're building some momentum there. I think if the big tech earnings are good, we'll see probably that come back in full strength. It's probably highly dependent on the earnings this week. And then we have the SPY at 33 in net options sentiment for Prospero in Prospero, which is a lot closer to a level of the QQQ than it's been in recent days. It was actually outpacing the QQQ, which was a big change we were seeing, because for a long time, like basically all of 2024 and up until a few days ago, the QQQ had religiously been above the SPY in strength, and that just switched. So I'm wondering if we're going to see a reversal with the earnings today, which are just about an hour away from now. Hello, George. Welcome to the stream.
Hello.
So let me look at the market, because it's been very volatile, and I think Jerome Powell should probably be either done or just finishing up speaking by now. So let's see if this move is still following through. It looks like we're higher than from when the Fed decision was released, but we just did recently give back a little of that pop we were seeing. So market is kind of undecided on which way it's going to take it. Let's check in on Bitcoin. Bitcoin is kind of doing the same as the market, but a little bit more volatile, but it is positive now as well. We just looked at the net option sentiment in Prospero for SPY and QQQ. They're a lot closer than they've been. QQQ is 26, I believe, and SPY 33. So they're moving closer together. I guess the market is probably just all eyes on these earnings that we have after the bell that we're going to get into. But reacting to this Jerome Powell decision first, no surprises here, right? Fed remaining steady at rates, and seemed like he was able to kind of calm the market's nerves as he was speaking today.
Yeah, I mean, sorry, I have 2 more things to do. This is just one of this week is probably the craziest week in the market I've ever witnessed.
So starting with DeepSeek, which got us off on the wrong foot this week, and then Nvidia losing the most market cap ever for any stock in the history of the stock market. That was Monday. Then it popped back up, I think 9% Tuesday, and now we're back down again today. So it's not often the biggest stock in the market is moving 20%, 10% day after day. So yeah.
I mean, it's just absolutely insane. Even this even, the reaction to Powell talking, they were more cautious on inflation than they've been. So yeah, I'm pretty surprised at where we're at here. I'm pretty surprised at the I mean, what I'm not surprised is that it's volatile. But I am surprised that the initial response to it, after it settled in, was bullish in light of all kind of the issues with the market, the worries, everything there. Yeah, it's a very, very interesting day. I think one thing I'm going to try to do at the end, Stephen, I haven't even told you this yet, just because I think I need to put it in the letter. I'm going to try to run down all of my thoughts and why I did all of the things I did this week, because it was a lot. And I think it might be a good opportunity to learn. So yeah, I think I'm going to do, that at the end of our normal topics. But yeah, right now I just opened up, I'm a little late because I was just opening up a bunch of new positions. Essentially what I'm doing is I'm layering in more of the stocks that I like on the long side in case this, momentum continues, as well as more of the shorts I don't like, focusing a lot on semis, especially because I think that, that's one of the things we're all just staring in the face right now, is there could be more bad news that sends, I would call, I've called China stocks radioactive before. I think being long chip stocks right now is radioactive. No matter how you might swing trade it, you might be very good with something like Nvidia that might continue to have wild swings. I'm not really interested in that. But I'm trying to grab reliable tech things. And I think we talked about this in recent letters. Some people are like, well, I'm an investor. Maybe this is too many moves. I mean, you saw it on Monday. And I'll say it later in this, if I had one regret on Monday, it's that I didn't start aggressively shorting things right away in the morning. That's my one regret, that I wasn't more aggressive, right? Sometimes if you're talking about, protecting your financings, building your future, the world moves fast, and you can either move fast and make sure you're protected and adjusting as it, jolts one way and jolts the other. Or you might lose a lot of money. I don't and that's not to say, more passive investing is not a good strategy for people that, really can't look at their phone a bunch during the day or check stocks or whatever. But if that is you, I would definitely consider having a larger hedge on than you normally would.
Yeah, so I have some questions. So we'll get into NVIDIA in a moment. But what I want to ask you first is, I got to hear the beginning of Jerome Powell speaking, and they asked him immediately about what Donald Trump had said, where he's going to encourage the Fed to lower rates. And he said that they haven't spoken yet. And he kind of talked about how, the Fed is independent and all that. Do you expect Donald Trump to react to this Fed decision and that tension between them to keep building? Or do you think Donald Trump will kind of not respond to this unless kind of asked by the media or something like that?
I mean, we've been setting this up, right? This head-to-head battle. We've been talking about it, and it's pretty much gone, as we expected. That, maybe our economy wasn't in as good of shape as we might have thought. And Powell, or some might have thought, I should say, and Powell and Trump have different ideas of how to handle that. So I think it's going to be very interesting. I think if you're predicting things, as a veteran of predicting things, I've done it for many, many years professionally. The most important thing is to know what you can predict and what you cannot. And I am not going to even pretend for a second like I can predict what Donald Trump is going to say. I could see him waking up tomorrow and threatening Jerome Powell. I could see him saying nothing, right? Either one could be true. I could see him doing something else, like saying, hey, I want to put $100 billion into some Mag 7 companies to duplicate the DeepSeek model, right? Try to do what they did, reverse engineer. Like, everything's on the table, which is why, like, this is a very unique time and why I'm making so many moves, right? I'm just making sure that I have protection as the ebbs and the flows of the market goes, and I'm protecting my downside, and I still have my upside.
So there was an interesting development that happened this week where there was news that broke out for X and DJT stock, Truth Social. So first thing that got announced was that X is going to be adding a financial services aspect into their app, and they partnered with Visa to do that. It's something that Elon has talked about for a long time, building an everything app. And then today it was announced that Trump Media is also doing the same exact thing. They're adding a financial services into their Truth Social app, and they're doing it with Charles Schwab. And people are expecting that the Trump coin will be involved somehow with this next thing for Truth Social. But I just think it's kind of funny how Elon and Trump are kind of competitors in this social media space. As you know, I don't know how competitive they actually are with, obviously you'd bet on Elon, and then they're like allies in the political field. So it's kind of a funny dynamic going on there.
I think it's kind of funny that everyone is trying to like have the everything app now, right? Like, is DJ, like, correct me, I don't know. Is DJT even do they have a product yet?
I think the Truth Social app, but I don't.
The Truth Social app.
Yeah.
How many users does Truth Social have?
I'm not sure. If you look it up, I would guess probably between 5 and 10 million. That would be my guess.
No, see, this is what I was saying. It has 513 active daily. Oh, wait. Oh, no, that's as of April 2022. Truth Social. Anyway, the point I'm making is we're living in a very interesting time because, like, typically you'd grow a user, to get a data point, right? Meta and all of their users don't even have financial services. And I've actually hammered them for that before. Like, I think it was a mistake that they didn't have payments themselves. But the point that I'm making is it's interesting that we're now in a world that, apps like DJT that aren't even really scaled that well are already talking about all these add-ons and everything, because typically what you want to spend money on, right, is scaling your user base before you start to spend money on other things like add-ons, transactions, blah, blah, blah. So yeah, it is a very interesting time. And to elaborate on that, the interesting time is where, capital is flowing more freely, especially to ideas that Donald Trump has more than, I've ever seen it, right? Typically you have to prove it out more. People that like Trump, he just throws his name on something now, and all of a sudden there's capital beyond, what it is, whether it's a cryptocurrency or a stock, it's, and we've obviously talked about this, we've gone from a time where, presidents didn't even have, they put their assets in a blind trust, to a time where presidents, I guess, are an asset in, less than 10 years. That is a crazy journey, right? And on the other side, it also makes sense, right? If you're going to invest in a company, in anything, an asset, something that is backed by the leader of arguably the most powerful country in the world, maybe looking less and less with this DeepSeek model. It's not a bad place to speculate, right? But that's also what makes it hard, right? That's what we're talking about. Like, do you really want to have a company that you're investing in starting to build out financial services before they've even really scaled their user base to the levels that you'd want to have before you're, putting other products together? So, I mean, it's very, very interesting. It's going to be very, very interesting to follow. But yeah, just another crazy thing in this crazy market that we're seeing this week. And, maybe we have to strap on, right? Because the one thing I said, I was talking to someone earlier, and the one thing I said was, okay, like, you better protect your downside on this DeepSeek thing. And any day now, NVIDIA could lose another 30%. Any of these chip makers could lose another 30%. You got to be able to protect your downside, right? But on the other side, that thing that I mentioned, Trump could tweet that he's going to fund, the Mag 7, right? So there could be events that drive the market up or down, or sideways, and and nobody can predict them. So my big message, and clearly what I'm doing, but my big message to you, make sure you have a hedge on. If you are all long and you don't at least have, I would say, at least bare minimum 5% of your portfolio in SQQQ right now, you might be very sorry in a month or two, or maybe longer. Or you might say, hey, the market tanked and I wasted money on that SQQQ. Thanks, George. But that's always how you have to look at it. And some people struggle with this because people tend to think in binaries, right? And so you don't necessarily know you need insurance until you need insurance. So that's the word of caution. But the big thing is, I'm always, whenever possible, trying to wrap my head around everything and get conviction, right? That's what anyone should do, right? But there's nothing more important in investing, trading, whatever, than managing expectations, going in with a good plan, right? And I think a good plan right now has to entail understanding that there is no good plan. There are too many of these things that could just like pop up right now, the beginning of a new administration, a president that uses social media before they even pass law, this model that's just come out that has rocked the world. Like, yeah, buckle up and be hedged. And yeah, if you don't want to be very active and monitoring your portfolio, maybe you want to just grab yourself a Vanguard total return or a dividend ETF, and then SQQQ on the other end, or an inverse semiconductor, and just don't pay attention to anything. If you are, and by the way, something that retail, a lot of inexperienced investors isn't common knowledge, volatility is an institutional investor's best friend. A good, great, excellent investor loves volatility. Volatility is where you can make the most money if you know what you're doing. But it is also the easiest place to be out of your element, which is why I really caution you and always do my number one rule, which is be honest with yourself if you have an advantage, right? Do you have some kind of, if you're going to invest in NVIDIA, do you have some kind of edge in figuring out like what's going to happen next with DeepSeek or what NVIDIA might announce? Or, I've heard rumblings that maybe some of the Mag 7 might have similar technology and they just didn't want to roll it out because they wanted to charge more. And now that it is, they're going to roll out their comparable technology. There's so many permutations, right? So is it realistic to think you have an angle on that? I don't think so. What do you have a good grasp on? Really drive yourself on that. Otherwise, just manage risk. And Steven, it got very bright. Can you still see me, or is it I just can't see the screen?
Yeah, it still looks pretty good. It's bright, but it's fine.
Great. My freezer, I realized I left open. I'll be right back.
I'm wondering if that was what I was hearing. I was like, something is dinging or beeping or something. When you get back, maybe we could talk about the earnings that we have on deck today: Tesla, Google, and Meta, and which one we're most confident on, which one we're most risky on, and I guess the volatility will continue depending on one way or the other.
Yeah, let's talk through it. I'm holding both Meta and Google through earnings, and I'll tell you why. Meta and Tesla, right? Meta is kind of more of a simple thesis, right? It's that everything's been going well. Price targets have been raised. They've been doing very well. They've been doing well beating, right? Ad revenues are looking good. They're buddying up to Trump. Maybe there's some expected dealings there. Maybe there's some, upside user number reports in terms of like what happened with TikTok, migration, blah, blah, all that stuff, right? So I've got to at least see what's going to happen with Meta because there's all that potential upside, but I'm going to be quick with the hook. The second I see probably 5% down, maybe 4, 3 or 4, depending on how it looks, I'm getting the hell out of there. And then Tesla, you got who the hell knows what Elon's going to say about what's going on with him and Trump and what it means for Tesla's business. I think, honestly, the last deliveries was a little disappointing. So my value investor in me says, don't hold Tesla instincts, but everything in this new momentum, Trump world, blah, 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 tells me, yeah, gotta hold, gotta see what happens. So I'll be listening to both, and I'll be same kind of thing. It's going to be a quick hook because the thing about it is, in this volatile market, a bad earnings could send either of them down 20%. I don't want to be around for that. So the second that I see, that start, I'm getting the hell out. Oh, and Google, don't go anywhere near that. Talk about I could
just let me know if you need anything.
That's hilarious.
Listening.
Yeah. Is it still? I can't see myself at all. Is it still good? Looks good on your end, or should I alter the camera a little?
No, it's okay. It's bright, but it's good.
As for Google, we're talking about, I could easily see it go 30% up or down, right? They could basically ignore the DeepSeek, play it down, blah, 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 all of that. But then guide down a little bit because they are worried and they don't want to give bad guidance based on, maybe they're worried about, some search being lost as these technologies, I think Perplexity and DeepSeek, and TikTok all had a thing together or whatever. There was a lot of stuff, but anyway, the downside's a little more obvious. The upside is maybe they announced that they have a deep, we're saying, maybe they announced that they have a DeepSeek model, right? And it just goes and it just holy shit, Google's got one too. Bam. Right? Because what you always have to remember is that It's really hard for American corporations, even though DeepSeek is local, to use it versus an American competitive product, right? It's going to be all about price. So if Google has something like that, or they say they're close or in development, it could go. So I would stay far away from Google. And again, unless you have some insight that's special to this scenario, which you might, if you really know your LLMs, if you really know how this might play out, if you know a lot about what's going on with Google, or you really think DeepSeek is overrated, or lying or whatever, like there's a lot of variables there. But I'm not going anywhere near that stuff.
Do you think Google could be asked about or mention anything to do with quantum and make those stocks move one way or the other with today's earnings?
Quantum. I think people don't really like. I think the best way to answer that is like quantum is the later, right? This DeepSeek thing is the now. Nobody really gives a shit about what's going to happen in 5, 10, 20 years. 5 is like the most ambitious, right? If something really disruptive could be happening right now, right? That's kind of like white noise at this point, as far as I'm concerned. But who knows? Maybe Google says, actually, that DeepSeek model doesn't mean shit because we have a quantum computer that can do the same thing and charge you even less than the DeepSeek model. Maybe our models aren't as efficient, but our compute is, right? That could be something. But that is why I'm saying what I'm saying too. Like, we are now in a time where, you could call it like an AI Cold War with China, or like whatever, that both countries are definitely going to want to be exchanging these blows, right? And we don't really know what any of these companies have. And Google especially, keep in mind, like they didn't work on they let OpenAI have the transformer model. They didn't work on the transformer model. There's a lot of stuff that Google like either passes up or has. And Google, I'd say more than any other company, like demonstrably, like seems to care about the ethical implications of what happens with AI, right? But now if they're worried that, China is going to potentially unleash something anyway that doesn't care about ethical implications, all of a sudden you change the equation for a company like Google, and they might have something, out of deep mind that is much crazier than this, that they were just worried about unleashing onto the world, that now they're just like, they did it. Let's see. So that's the world we're in now. Buckle up. Hedge your bets.
I want to double click into NVIDIA and bring them back up, comparing them to Apple. So something I saw a lot of people highlighting for NVIDIA stock is their 200-day moving average, which they lost today after regaining it yesterday. But it is kind of battling right now. We'll see how it closes, whether it's above it or below it at the end of the day. But something I noticed over the past, I guess this week, is Apple stock, which had been very weak recently, started to gain once there was weakness in everything else. And I was wondering if you think it could be because of Apple's approach to AI, where they didn't really heavily invest in their own tech. They kind of just ingratiated other tech into their products, so they didn't have to spend nearly as much as other companies. I think like Meta just made an announcement where they're investing like 60 billion or something going forward. So maybe the market's rewarding Apple, and it's kind of like an inverse NVIDIA with this new development that we've had. Because I feel like the market's really concerned about the spending of companies on tech. That's kind of like at the crux of what's happening now.
Well, no, it just like it changes the equation, right? If your models, right, are the value, right? A place like OpenAI is way more valuable, right? But if models are the more and more ubiquitous models get, and by the way, that's been the path of models for the long time. That's why I actually got out of AI as a service. How many years ago now? I got out of AI as a service like 6 years ago now, because I saw this and I was just like, shit, the price, like the price of technology is going to zero. I'm not going to try to build, like, I'm not going to focus my beachhead on innovative models. So that was 6 years ago, and that's accelerating, right? So, like, what matters if the value of models, that technology goes down to zero? Well, maybe hardware, right? Maybe hardware, and the usability of it, right? But not so much, because, for example, one of the things, Apple's hardware runs efficiently, and they do some clever things. Like our app, for example, runs better in iOS than it does in Android, even on more powerful Android phones. So Apple does some clever things. But if the code that's powering these things is ultimately cheaper, more ubiquitous, right? Then having efficient hardware like Apple makes, right, isn't necessarily that important either, right? So what is important? Brand is important, right? If it literally doesn't matter, like everybody's got the same technology, anything can run on anything, what matters? Like brand is one of the things that matter. Product matters. Do I already know how to use it, right? How easy, intuitive, things that Apple does well, right? So I think that's what people are leaning on, right? They're saying, okay, I don't really even I'm looking at the market. Maybe I don't know if any of this shit has value anymore, right? What does? Maybe their usability, maybe their brand. That if everything else is equal, right? If all the costs that run in everything else, hardware, everything else is equal, that becomes much more relevant.
So the company, the ecosystem that it builds for itself and the reputation it has amongst its users, kind of, I think what you're saying. And then also, like, it would sound like to me like a company like how we mentioned on Monday, Tesla, where their AI is going to be used in a car, or Apple, where their AI is going to be used in a phone. That type of use case is better than like Microsoft or OpenAI, or these companies developing the tech, because the tech is constantly becoming cheaper. So that's something for people who are investing and watching our stream to keep in mind. That sounds like that's a trend that's going to happen forever and ever, regardless of this current DeepSeek, chaos, from what you're saying.
Yeah.
So I wanted to bring up this other story that I found today, because it was shocking to me when I saw the country that is the home to the largest sovereign wealth fund in the world. And I think it will surprise a lot of our viewers, and maybe even you, George. So if you want to take a couple guesses or one guess, because I made sure not to tell you before the stream started on where this sovereign fund is located.
I mean, I feel like the obvious one is Saudi Arabia, but if you're having me guess, it's probably not that, right?
Correct. Warmer.
Not UAE either.
Let me give you a hint. It's in Europe.
Sovereign wealth fund. Germany?
No. And want me to just spill the beans?
Switzerland?
Nope. Although you would think Switzerland, because they're, I think, known for...
Yeah, spill the beans.
So this sovereign wealth fund is in Norway, and it had its... Oh, Mario just commented.
Yeah, Mario at the buzzer.
Yeah, so it's in Norway. It had its most profitable year ever in 2024. 2.5 trillion kroner, which is $222 billion in profit. And that was built on the backs of the AI rally, it said. So I'm sure that fund is probably not doing as well this week as it did its finish off last year. But I just wanted to bring that up because I thought it'd be a fun thing for you to try to guess Norway that has the. I would be with you. I would guess like Saudi Arabia instantly. So that was a surprise to me as well.
Yeah, I mean, Europe didn't even help me very much.
Yeah, there's other countries. You're right that you'd expect before them.
Yeah, I mean, it's interesting. I understand now that it's Norway because I mean, that's kind of an interesting question of like what. I mean, I guess sovereign wealth is just like an extension of not having any debt, right? Because I was like, well, why doesn't the U.S. have one? It's like, well, because we actually owe money. So yeah, that's super interesting.
I feel like the model portfolio update. I know you said you want to do something else as well, so I'll try to switch over early. I just have one more thing to bring up. So Starbucks had earnings, and the reaction was positive, but their China business shrank 5%, not year over year, quarter over quarter. And it was the first time I've ever heard someone mention that they believe that Starbucks should spin off their China business because it's just dragging on them overall. Do you think that will become a topic of interest for other companies? Do you think that's a good idea for Starbucks that have big China businesses?
I think China spin. I mean, depending, I don't really know how the economics of it would work that well and how it would work for the stock or anything. But in theory, it's a good idea, right? And it's a good idea, I would say, mostly because China tends to be friendlier to Chinese businesses, right? So if you spun it off, let a Chinese company kind of own it, right? And then still retain the profits, or a certain amount of the profits, kind of like a big franchise, that might actually be really smart because when you're in China, you're always going to be dealing with a lot more, you call it resistance, you want to call it less friendliness. You're not dealing with the same level of ease if you're not a Chinese corporation, right? So yeah, I think from that perspective alone, it's smart. But the other side is that's why I said I don't really know the economics. The other side to it, especially the profitability aspect, right? If the margins are better in China, which maybe they are, because maybe it's cheaper. I don't know. No, I'm not gonna. I'm just maybe it's cheaper to get the goods there, and the labor, and you charge the same. So maybe the margins are better. But that would be the one concern. If the margins in China are better than in other places, then chopping them off would lower the margins of your whole business, which is a dreadful thing to do for any public company. A lot of more mature companies move on margins more than they do on anything else, right? Because what everybody, a lot of people maybe don't know about profitability is profitability can have a lot of one-time charges. You're writing something off, you're doing this. There's a lot of things that have nothing to do with the core business that end up being reflected in earnings per share. But if you're talking about a move, especially in top line gross margin, right? If you can get your margins up, right? That's pretty much the best thing you can do as a mature company, because that's that's challenging, right? Think about a mature consumer packaged goods company like McDonald's, right? If you want to get your margins up, the only way you could do it is to cut staff or lower what you pay them, which you're never really going to do. That just goes up, right? You could get more efficient in your supply chain, which at this point, how much room does McDonald's have to do that? Or you can get cheaper inputs, which in this inflationary economy, whatever, not easy, right? So I'm just laying it out for you, for one business, pretty hard as a mature company to decrease your margins, right? So that's all to say, increase your margins. So that's all to say, if Starbucks wanted to increase their margins, if Starbucks was going to decrease their margins if they chopped off the China business, that would be very, very bad for them. And like, there's probably almost no price that they could be paid that would make up for that. I mean, there is a price, but it would probably have to be very, very high, more than anyone would really want to pay for it.
Well, the time has come. I'm excited to see what our moves are today ahead of these massive earnings we have. So,
I gotta get the video. And actually, if you could edit, I'll talk about this later. So I'm going to tell you about the week and why I did everything that I did. And I'll just start and I'll start rattling it off, right? I got up Monday, right? Actually, I was 8 long, 6 short when I started. So I actually, I can't tell you why. It was pretty bullish, but it's been so volatile with everything. I've just been residual caution, right? And even then, we got absolutely hammered, like everyone did when it's open. And as I alluded to earlier, my one mistake, I checked everything when I got up and it was like red, but things were going up. Like things like, I remember when I got up, things like Palantir and App11 were down like 5-6%. And I saw them creeping up to about down 3%. So I was like, well, I don't want to overreact and start shorting things, right? That is my one big regret of the week. I should have started shorting Micron, Dell, these things that I was shorting later in the day. Their option sentiment were starting to change. It didn't react that fast, but, with the turn, I was wanting to see more data. As that happened, right, I was loading up on a lot of shorts. Right. And also trimming my longs, but adding some longs that I had conviction in, like Bitcoin was more resilient. So I kind of kept my Coinbase position. Looking for, other names, but mainly just keeping what I had to see if it would recover a little more. The names I liked more, like Meta and Tesla, and App11 and Coinbase. And getting out of everything else, that especially ones that had lower net option sentiment. As the week went on, I was really, really focused on finding opportunities, right? And one of the things that even my paid subscribers, I sent this alert at 9:29 when Xerox was down a little, and at open they went down a lot. So sorry, I would love to get those to you sooner. But basically, when these things happen, right, I look for opportunities that fit with the theme, right? What was the theme? The market was worried, right? I saw Xerox report not great earnings. I didn't know why the response wasn't. And I was kind of like, that was my delay. I was like looking at it. I was like, why isn't Xerox getting hammered more than this, with the way the market is? And one of my best moves of the week. Got in there right before open, went down because that was just a logic thing right there where it was just like the market's really nervous. These aren't great earnings. Xerox is always bad in our signals. That was a really nice opportunity. And, even people that, fancy themselves investors, long-term, whatever, you're never going to be your best version of yourself if you can't locate opportunities like that to protect your downside. Everything after that, I was just scaling more into names I had conviction, right? Uncertainty. I was short, I think, as much 3x Dell at one point, and I was long as much like 6x Coinbase at one point. That is what I always lean on. When I don't really know what's going on or where it's going to go next, I lean on what I know. And I knew Dell was at the bottom of momentum score. Coinbase was still looking good. Kept 100 net option sentiment. So that was my strategy. Now we get to today when things were, starting to be even crazier. I was a little nervous heading in to the meeting, right? I had exited some of my positions, some of my conviction positions, right? Like Dell and Coin, I had reduced to lesser positions. Why? Because I was taking gains as things like cleared up a little bit more in terms of the direction and the volatility in my mind. I was taking those gains because I didn't want to be over concentrated on like Dell swinging back, right? Or Bitcoin going down. I then wanted to de-risk and spread it out, which is when I started to add more short names. When I got into like SPSC, STX, I was looking for diversity in my shorts to protect against. I was a little worried about the Fed, right? Then when the Fed happened, like it looked bad initially, and I increased more diversity, more shorts, just to make sure I was covering, more sectors, more market caps. Then, kind of back to Monday when it flipped back the other way, I was just like, oh shit, this market can't really decide what it's doing at all. So that's when I got into block and coin again, because I was like, I have conviction on that. Actually, for the first time, I realized we have to update block in our app because it had a ticker change. But for the first time, I actually am acting on a tip that I trust in terms of someone that's really increasing their position because they have conviction. So that's why I did block. I'm taking my conviction from someone else, which I can't really talk more about why. But I validated it as I always recommend. I validated the thesis. So that's why I got in, right? So you're seeing me yo-yo, and that's why I wanted to say the whole thing. I'm always trying to be opportunistic, but there's times when when there's just so much volatility that I have to just concentrate in what I'm most confident in only. And then there's times when, I've seen that work and I've gotten some profits, and then I take those profits and spread out more again into more sectors, more market caps, and why? Because in times of volatility, the most important thing is to take your gains. Take your gains before they become losses. I know that's uncomfortable for some and their strategy, but that's why I didn't lose conviction in Coinbase or Dell or whatever. I'm just taking my gains when I had them, just in case there's a big swing. And then I'm happy to enter again when I'm seeing, more volatility, craziness ensue. And I just wanted to explain that because I've been making a lot of moves, and I wanted to give people the context of why and what the rationale is behind that.
Well said. And hopefully, if anybody was wondering, that addresses their
All right,
wonders.
now I got to do this, maybe the fastest update ever.
Yeah, we'll see. We'll see if we can get it in. We'll be back with us on the other side. Stick with me, everyone. We've had close to almost there, 2,000 people join the stream today. So thank you all for being here, whether you're watching on X or YouTube. Smash that like button. Happy George was able to explain, because I think he was getting a lot of questions about how many moves he's been making recently. So hopefully, if you were wondering, also that helps you. I'm going to check and update you guys on QQQ and SPY. There's 5 minutes left in the trading day. Let's see how the markets are actually looking overall. Was that bullish move able to hold? Kind of in the middle. It sold off from the highest it's been at. We're going to close red overall in the market, but I don't think it's really decided one way or the other how it feels about the Powell and Fed move. Maybe it's more concerned with the earnings we're about to get. So
okay, so here's what we're going to do. We are going to just do position updates. That's all we have time for.
QQQ 16 and SPY 33 as we head into the end of the day.
I'm not sharing my screen yet, am I?
Nope.
here we go. We're not doing this today. Just no time. Damn, we have not been updating this link. It's gotten pretty old. Okay. All right, what do we got? RCL. All right. I've been thinking about this, so yeah. This has been up here. I don't really know. I don't think I need anything else. No, I don't think. Sure, a little market cap diversity. 10 energy. That's very low. Okay, I don't know why, but that's worth respecting. Okay, what do we got on the bear side? I think broad protection here is not a bad idea. I don't know what's going on with you, but why not? Sure. Okay. Some new positions. I wish we didn't have so many. No time for this today. All right, 38. Interesting. Okay. Nothing closable. At least not that I see. do is close out some doubles. Oh, God, I hate when I do that. All right. We cut some corners on it, but there we go.
Yeah, that was
Any
well
last
past speed running.
questions?
I don't see any in our chat. Hopefully, we get some good earnings and the market is, well, I guess it depends on how you're positioned, but we'll see. We'll see how these earnings come out, everybody. See you back here normal time Monday, 11 a.m. Bye, everyone.